What's up, guys, and welcome back to another Sunday prep video. Today, we are going to be laser focused on an area in the market that I believe presents the best opportunity heading into next week. As most of you know, I had a pretty rough July, and I think it really attributed to me trying to catch everything going on in the market and not laser focusing on the main opportunities. This is something that I am very focused on in August, to only trade where the money is and only trade where the opportunity arises. Now, of course, we will make a video about my July performance, and if you guys are interested, make sure to let me know down in the comments below. I'll go ahead and share with you guys some of the things I learned from a red month in the month of July. Now, the last thing that I want to go ahead and answer for you in today's video is how to know whether last week's pullback is just a short-term pullback that will get bought up into next week, or if this is a continuation to the downside move. Is there more opportunity to the downside? I will show you guys in today's video how to tell. All right, guys, so the first thing that we have to understand is that we had a very heavy economic calendar week last week. We had a very heavy earnings week last week, and we're coming into a week where we saw a big move to the downside, and we don't have as much of a catalyst. And this is a recipe for sideways action, right? The market is likely going to want to digest and wait to see what the next move is, right? There's going to be a lot of traders that are just sort of uneasy about what's that next move, a lot of question marks, not a lot of catalysts as well, and it's a recipe for sideways. And so something to understand coming into next week is that I know a lot of people are going to want to catch similar moves to what we saw. They're going to be very anxious for big moves and a lot of volatility, but we really don't have those catalysts. And a week of digestion is very, very possible. So something to understand heading into next week. We're looking at our economic calendar here. There's not too much here, right? Not a lot of red folder events, not a lot of things that are going to move the markets. We just saw a big move after FOMC, after major earnings, so it could be a little bit of sideways. Something to first understand heading into this week. Now, with that said, there are some very big earnings next week, so that could definitely add some volatility for us. So let's just make sure we are familiar with the earnings that are coming up. Looking at this calendar, I'll go ahead and point out the ones that I think are most important. Obviously, heading into tomorrow, Palantir is going to be major. This is one that's been very watched over the last year, right, with the big move that it's made. HIMS is also a very focused on stock, something to be paying attention to there. And then for the semiconductors, AMD and SMCI next week, I think, are going to be major. AMD has made a huge move off the lows. A lot of people talking about it. A lot of eyes on this stock. Earnings coming on Tuesday. How they report is going to be very important to the market to see whether that big move that we've made is given back or if it's warranted. And so this is going to be a big name here on Tuesday. Moving forward, we have Uber and Shopify, two decent names. AppLovin, APP on Wednesday as well, something to pay attention to there. Heading into Thursday, Trade Desk is a decent one. Eli Lilly, those are some decent ones there. And then we end the week with Fubo, and not really anything I'm too interested there. But when I look at this earnings calendar, these are the two that are very important. AMD specifically being, I think, the most important earnings heading into next week. And later in today's video, we're going to really dive deep into the SMH and the semiconductors. This is that one sector that I believe is going to be the must-watch sector heading into the end of the year, really, because this is what has driven the NASDAQ higher. And how the SMH reacts from this point forward is going to be very, very important. So with a little bit of insight on the earnings, a little bit of insight on the economic calendar, and then making sure we think about the fact that the market made a very large move last week and some congestion and consolidation is probably the right idea, let's start on the technicals and let's start with the daily chart. Let's zoom all the way out and get an idea of what happened after last week. This is very important to do after a major move on the market. You need to get a feel for what just happened when you zoom out. Where did we just pull back to? What are some levels that are very big when we look to the left? Zoom out and look to the left. A very, very important thing to do. So let's start here. Here's the S&P 500 ETF, and you guys can see that if we look all the way to the left back to previous all-time highs, we can see that is right here from back in February of 2025, right around $610 to $613 per share. Now, when I look at this chart, to me, it looks like the SPY wants to come back to this level. I can see that the SPY had a very clear major high here that we squeezed above without any type of pullback or retest. And it looks like to me that the current move lower is likely going to want to come back down and test this 610 to 613 previous all-time high. And so that is definitely something that's in my mind heading into next week. If we do get some further pullback, one, I want to be open to trading that downside. But number two, I don't want to find myself short at previous all-time highs. So if we are back at 610 to 613 on the SPY, I would probably start to relieve yourself of short-term downside trades, because at that point, you would be trading back into the previous all-time highs, which is likely a bounce point on the market. Maybe not back to all-time highs, but absolutely a short-term bounce point where short-term options or short-term downside trades are going to become under pressure. And so something to pay attention to and to make sure you have on your charts is that 610 to 613 area. Now, what else is there? We can see that the other thing that is sitting right in that zone, if we zoom in, is the daily 50 SMA. And that daily 50 SMA is typically the next spot that the market wants to pull back to after breaking a daily 20 SMA, right? So we broke the daily 20, the shortest moving average to be watching in my eyes. Underneath the daily 20, you typically look for that daily 50. And it just so happens that that daily 50 is sitting right at previous all-time highs. When you start to see things like this sort of match up, right? A previous all-time high matching up with a daily 50 SMA, there's a chance there's a magnet trying to get the price action back to that level. So that's very interesting to me, and that makes me think that you want to see a move back down to that level. Now we can do this same analysis on the QQQ, and you can see that this lines up pretty much perfectly. It lines up just like the SPY ETF. We have some very clear previous double top all-time highs here at $540 per share. We can see that that is probably, in my eyes, the area that the market is going to want to come back down and retest, which also lines up perfectly with the daily 50 SMA. So if we do find ourselves at 540 Qs and we find ourselves at SPY 610, 613 area, I would understand that that is a retest of previous all-time highs, and to make sure you're not in tunnel vision, zoomed in, trying to short back into it. This is very important over the next few weeks. Now, the next thing I want to show you is a key level that I believe must hold next week, or we're going to see that pullback to the previous all-time high. And we're going to use the volume profile to highlight the low volume area that is below on the SPY, the Qs, the S&P 500 futures, as well as the NASDAQ futures. So right here on the S&P 500 ETF, you guys can see that we have this very defined valley in the volume profile here that really doesn't start to pick back up until around $600 per share. But I would assume that that previous all-time high does create an area of support. But I want to show you that there is a valley of low price action below, or low volume below, that you should be paying attention to. And if I zoom in here, you guys can see that there is a very clear shelf that I believe must hold next week on the SPY, and this looks very similar on the Qs and the futures contracts as well. So looking at this hourly chart, you guys can see that we have these very clear lows right between the 620 to 618 area. We have previous lows all of July. July lows right here and lows right here between the 618 and 620 area. And you can also see that this is exactly where the S&P 500 held up at the end of last week. You can tell that this is a very important spot. And so under 618, if we are to break that low, I would expect you to go through that low volume area back to that previous all-time high. So a break of 618 next week, in my opinion, would influence the market lower. This is something that I would be paying very close attention to. Now, like we said in the beginning of today's video, after a major move to the downside like we saw, I am not opposed to thinking that this demand is going to hold up and we are going to see some chop for part of next week, maybe all of next week. right? This major demand steps up, it holds again, and sort of keeps the market suspended, and it sort of consolidates and digests the move that we just saw. Now, I want to show you this on the QQQ as well. You guys can see right here, we have this very clear low around 549 to 552. These were the lows in July, and I believe a break under that would influence to that 540 area. If I show you the volume profile, you can see there is a pretty decent drop off in the volume below this 549, 550 area. Under that, you start to get into some low volume, and in my opinion, that takes you back to that 540 area. If I go to the S&P 500 futures, you can see underneath the 6225 area, there is a very, very low volume area here back to the 6100, right? So you are heading into this low volume area below, and if we start to navigate through it, we're going to see downside come in quickly. Underneath around 22,800 on the NASDAQ futures, there is a little bit of a level here at 22.6, but under that, you can see once again, very big valley in price action, very big valley in volume. And if we start navigating through that, it's going to be quick and aggressive back down to, in my opinion, 22,220. Now, of course, we're going to be doing S&P futures, NASDAQ futures levels every single morning on the pre-market live stream. So make sure to come to that every single morning here on YouTube for completely free. If you want to get updates on this on a daily basis, that is the place to go. Now, the last thing I want to talk about here before we jump into the SMH and some major opportunities on specific stocks that I'm watching very closely, let's talk about the daily 20 SMA. The daily 20 SMA, you can see right here, last week we broke below it, and I'm going to zoom into the short-term time frames. Right here, you can see on Friday of last week, this was the perfect rejection point on Friday. We broke below the daily 20, we turned it into a retest rejection level, and we closed below it. Now, this is going to be a major watch on any bounce next week. If we get a bounce off these lows next week, I would be laser focused on what happens if we push back into that daily 20, which is around that $628 level. If we see a bounce into that daily 20 and we start to reject again, that could really solidify that the market is going to start to continue lower. If we see the daily 20 turn into rejection points, that could be a shift of a downtrend on the market. Now, if we see the market bounce into the daily 20 next week and reclaim it and turn it back into support, that would be, in my opinion, the V-shaped recovery. And so that daily 20 is going to mean a whole hell of a lot next week. Do we reclaim it or do we turn it into a lower high? That is going to be very important, and I would assume the market is going to try to navigate back to that daily 20 on pretty much every major market ETF and futures contract. On the QQQ, you can see it is the exact same thing. Rejection of the daily 20. I'd assume you see that get tested again. On the S&P 500 futures, failure under the daily 20. I'd assume it gets tested again. And on the NASDAQ futures, the exact same thing. When that gets retested, which I don't think is a question, I think it's an inevitability. Is it a rejection or is it a reclaim? That is something you need to answer when you see that get tested. So with that said, let's jump into the SMH, and this is where my laser focus will be into next week. The SMH has been the driver of the market to the upside. Is it going to be the driver of the market to the downside? If so, I want to be here and I want to be making money off of it. You can see we had a very clear triple top high at $293 on the SMH, which turned back into a failure point here on Thursday and Friday of last week. After failing back below this triple top high, we saw the selling come back in. Now, what else did the SMH fail? You can see right here, the SMH failed below the daily 20, which is at $288 per share. So the same concept applies here. If we bounce again into the daily 20, do we reclaim it and do semis catch another major bid, or do we turn this into a lower high, leading to further downside? This is something that I am going to be watching like a hawk. Now, on the 4-hour chart, we can see we have some very clear lows that I think must hold next week. Right here, we have this 280 low. That was the low a day on Friday. It was a low here, it was a low here, and it was a previous high back in late June. If we break below 280, let me show you what the volume profile looks like. So here is your volume profile on the 4-hour chart on the SMH, and you can see that underneath this $280 level, there is a very clear drop off in volume until around the 265 to around the 270 area. 270 being the previous all-time highs right here from back in January of 2025. That is probably a likely pullback level, in my opinion, for the SMH. What else is there? Funny, the 50 SMA again, right? Look at how that 50 SMA is sitting at all of those pullback levels that we talked about in today's video. That is back to previous all-time highs. That is back to where the volume starts to pick back up here on the SMH, and that is where that potential pullback could be. We can see underneath $280, we have a very low volume area, which would navigate quickly to the downside if we see a clear break. So zooming back into the hourly chart, we can see that if we break this 280 low, there is a pocket of opportunity right here, back down to that 270, back down to that daily 50 SMA, and that would be a very nice downside move to be looking for on the SMH. Now, what I like and what you could judge this trade based off of is this area above between 285 to 288. This was a previous rejection, which tried to hold right here, turned back into a rejection, and we squeezed above it into end of last week. Now, right here, we can see that on Friday, this turned back into a failure point. We failed back under these previous highs, this previous hold area, and back under the daily 20. So if we are creating a lower high right here at this 285, 288, I would assume this creates a break of 280 down into that 270 and that daily 50, which could be a very nice opportunity. Now, in my opinion, the only way the market moves back higher is the SMH holds this 280, reclaims the daily 20, turns this back into support, and then you're back off to the races if that turns back into a reclaim hold. Very important spots to be watching on the SMH, and this is where I think a lot of the money is going to be made next week. Now, there is 3 setups that I am watching very closely next week, and they are both semiconductors as well as a small cap stock, I guess you could call it, but something that is driven based off Bitcoin. So let me go ahead and start with Nvidia. This is definitely a major watch for me heading into next week, and I want to break down why. On the 4-hour chart, we can see that the Nvidia trend is being tested, and the Nvidia upside move has been pretty incredible. However, there were some things that happened last week that maybe lead to the signs of a blow off top, or at least a potential deeper pullback. One, that SMH is going to be something I very, very closely watch to decide whether this is a trade or not. So, looking at Nvidia, we can see that there were some very clear previous highs here around the $174 level, which was a rejection point. We rejected lower, we bounced off, and we squeezed back above it. We can see that this area here at 174 actually turned into a support on a little bit of a break and retest long opportunity, which shot up to that $185 level. Now, something that's interesting, if we zoom back into the 1-hour chart here, we can see that Nvidia actually turned this area right here back into a rejection point right there. So we had rejections here that turned into support right here that failed all day on Friday. So if that continues to be an area that keeps Nvidia lower, I would expect these rejections to drive us to the next level to the downside. And to me, the next level to the downside is right here around 169 to right around where that daily 20 SMA is. So I will be looking very closely at Nvidia next week to see if I can catch failures right around this 174 to 176 area. Now, on the flip side, if Nvidia can reclaim back above this level and turn this back into support, that is equally as interesting of a long opportunity. But I can tell there is something important here to pay attention to. Nvidia turning this low into highs. That's a little bit of a bearish flip in my eyes, and if we continue to see weakness on this market, I like Nvidia to the downside. Now, this one is going to be pretty tight because you have that daily 20 below. You definitely have some demand here around 169, 168. So what you could do is you could wait to see if those break. If those break, then I really like this area right here to trade from 168 down into 164.50. If I go put on the volume profile, you will see a very low volume area. If I zoom out, you can see right here, there is a drop off in volume underneath that $168 level. So right here below this 168, 169 area, you can see we drop off in volume back down to this 164.50. This, to me, looks like a pocket of opportunity to look to the downside on Nvidia for some clean pullbacks and necessary pullbacks on a stock that has been red hot. We can see that Nvidia is failing this high, trading back down into that 169, 168. Under that low volume area, back down to 164.50, looking for this to line up with the SMH as well. The one that I am most interested in, and unfortunately there is earnings on this name, so we might have to push this off until earnings is done and sort of gone away, but technically it's a very interesting name and I want to be paying attention to it. Last Sunday, in our Sunday prep, we talked about AMD cooling off. Why? It was based off technicals. We can see AMD traded up into a major weekly triple top high right here at around $184 to $187. You can see that last week, that weekly candle ended in a pretty bearish doji, right? We can see that we ended on a candle something like that with a lot of selling at the top side of that weekly candle, and it's pretty clear to understand why. You moved into a very, very heavy previous rejection point. Now, the next thing that I'm paying attention to here is the next weekly high, which is right here at 174.50, right there and right there. We can see that this was a rejection and this was a rejection as well. And so if AMD turns this into a rejection point and then fails back under these weekly highs at 174.50 to around 172, that to me is a pretty weak move that should give back some of this upside after a very frothy straight up move. Now, if we go into the short-term time frames, remember this value. Remember 174.50 to 172. Let me go ahead and show you exactly what rejected on Friday. Look at how perfect that exact area was, a previous hold level that turned into a perfect rejection. That is interesting. We rejected that weekly high number 1, and we rejected that weekly high number 2 on a lower high. And so if AMD stays below this area right here, I think there is very clear reason to be looking for downside and a cool off on this name. Not bearish on the stock, but a cool off, and that is something we can absolutely trade. Now, looking at this on the hourly chart, there are some very clear targets to be had here. The low of Friday is 167. That would be number 1. Under 167, you would go pretty much straight back to this high at 162. And under that, you would be trading back to that daily 20 SMA. So this is something I'm very, very focused on heading into next week. If we reject these highs and break Friday's lows, I love the downside of 162. And that could be a 5-point area to be looking for some very nice downside trades on AMD. And if AMD really starts to sell off underneath that 162 level, we can see that really anything above 149, 150 is some very low volume transacted area, right? Look at the difference in the transacted volume when you move over 150. Right? Anything in here versus everything over here. Look at the difference of the volume that has been transacted north of 149, 150. So in my opinion, there could be a magnet to come back down and come back to where this volume picks up again at around $149 per share. Let's see if we can get some of that free-flowing downside on SMH and AMD as well. So guys, the last opportunity that I'm going to talk about in today's video is Hood. And Hood is an interesting downside trade as well. Now, I want to make something very clear before we end today's video. I've talked about mainly downside trades, and I do believe that the opportunity is on the downside for volatility and harsh rejections. This is where a lot of money can be made. Now, of course, this doesn't mean that we're just blindly taking shorts next week. We're paying attention to the market levels. We're paying attention to the economic data. We're making decisions on the intraday based off of whether that QQQ and that SPY holds that major demand. These are ideas to be making sure you understand and to be ready for if it shows up. Downside is fast and aggressive, and you cannot be trading through FOMO and just hope right? If that starts to happen, you need to have that game plan set. And if I see certain things fire next week on Hood, AMD, and Nvidia, I already know my game plan and I'll be able to take advantage of these moves. So make sure you come in again without a bias, but you're understanding a game plan based off of key levels on the market. So here on Hood, there's some key things that have happened. You can see that previously we had a very clear uptrend that was pretty much intact since the breakout of around $80 per share. We basically trended higher since that point on this very defined uptrend, all the way into a double top high at around 108 to 110 on this stock. Now we can see we had earnings last week, and on that earnings move, we broke this uptrend. We broke this uptrend and we started to dip below some previous lows. So you can see right here, we had some previous highs at $101. This was also a major previous low that kept Hood higher. That also was a bounce off the uptrend. We can see that this is also where the daily 20 SMA was sitting last week. So if I zoom in here on the 4-hour chart, you can see a little bit closer, major previous highs into lows, right? Uptrend bounce right here that failed below back under, which also is under the daily 20. So there is a very clear reason to be looking to see if Hood turns these highs back into rejections once again and turns the daily 20 into a failure point. If that is the case, I love targeting this area back down to these major lows right here at around $90 per share. This to me looks like a fantastic short opportunity if we see these highs right here turn into a failure point once again. That is a very, very nice watch. Now, another reason I'm interested here is because I think it could go even lower. If we break under this $90 level, we have pretty much no volume right here into 85. And if you break 85, you pretty much have no volume until 80. So to me, there is a very real possibility if the market continues to see weakness, if we continue to see some tech cool off, that Hood could trade through this low volume right back down to $80 per share, which would then become an awesome long opportunity. Remember, these pullbacks are not in a bearish market. They are pullbacks and cool-offs from frothy moves. These are pullback opportunities, but you have to pick and choose your spots because we're just sort of on day one of the downside, and there definitely could be more and opportunities to trade it lower. So guys, that's going to be it for our Sunday prep. I hope you're able to see the opportunities a little bit more clear into next week. Definitely continue to watch that SMH, those key levels on the SPY. Think about that previous all-time high retest, which I believe is very possible. And of course, if you want to stay tuned with these updates every single day for free, come to the pre-market live streams. Every morning, 8 a.m., we get about 3,000 people there on a daily basis, looking to continue to grow that. You get to start your morning with us, prepare with key levels, get that thesis for the day, and I believe it's probably worth it if you don't pay anything, and it could help you take some better trades with more educated information. With that said, make sure to press that like button and subscribe to the channel before you head out, and I will see you guys in the next one. Peace out.